All right, great. I was here in November. A lot more excitement with higher lithium prices, but fortunately there's good news that I'll deliver despite the recent pullback. So I've entitled this presentation today, the 2023 Q1 destocking doesn't change the shortage thesis, and I'll explain that along the way. So if we have a look at what happened since I was here last, we didn't have the last quarter numbers yet, but 2022's final supply shortage was greater than what our forecast. It ended up in the 130 to 150,000 tons LCE versus the 90. The 2023 supply shortage forecast has been reduced. I'm now down probably maybe 20 to 40. I've got 20 to 30 as you've had excess cathode and battery inventories from 2022 that have been drawn down in the first quarter and a little bit now in the second quarter. One of the things to note is in the first quarter of this year, you look at the spodumene concentrate grades from most of the producers, and there's been deflation. Those are going down, costs up, and the 2023 production ramp-ups are below forecasts. Africa is the unknown. I'll speak a little bit about that. But given the price at which lithium got to and spodumene got to at the end of last year, everyone was having a crack, and it's triggered some new supply that will no doubt peter off. If you look at EV sales for 2023, they're on track for 14 million units. BYD and Tesla are absolutely killing it, especially BYD. They're dominating the market. And the other thing keeps getting underappreciated is battery energy storage. That's going to grow by 100% this year. If you have an interest in that, we interviewed Motion. That will be up on our Rockstock YouTube channel, and you can have a look. But that number really is too low in analyst forecast, and we would say you need to focus on that. As far as we're concerned, the demand forecast for 2023 hasn't changed, and the supply forecasts, possible downgrade even in supply from ex-China, that could be a reaction to low prices in Q1, but at the moment they're running light. China probably looking neutral, given domestic lepidolite and spodumene and then what they import. And then Africa, the DSO and lepidolite is an upside risk, but that always comes with some ESG issues and with quality. We shall see. And M&A activity, large resource assets, anything sort of 50, 100 million tons and higher is seeing massive demand. And an example of that is the Liontown bid from Albemarle, effectively hostile, that's been turned down. What do I mean by concentrate deflation? It's really only Greenbushes that's holding now. When everyone thinks of 6% spodumene, that's not the case anymore. It's only Greenbushes, Wodgina, Pilbara, Mount Catlin, and the real laggard, which was a surprise even to me, was Mount Marion, was at 3.8. So that's what we're seeing, which is quite something. And what that means, just touching on that, is if you're getting grades well below 6, then your conversion ratios, your estimates of how many tons of spodumene you need for a ton of lithium chemicals, up you go. So that's something that needs to be adjusted in the model. So where were we? I've left my November chart and just overlaid on that with the red dashed boxes where I am now versus where I was. As I mentioned, 2022 came in a lot bigger in the deficit. That triggered some supply. We saw excess production affecting that. So it has had a roll-on effect for 23 and 24 and 25 and 26 even. But make no mistake, the deficit is still there. I've taken quite a hard view on inventories, as in very little build, and still coming out with those numbers. So the bottom line is, for all that's said and done, upstream investment is still a limiting factor. We know incumbents are pushing brownfields, and those are obviously important. But what we're also seeing is that incumbents are controlling spodumene supply, And you've seen Albemarle now utilize more tolling. You see MinRes utilize tolling. Pilbara is talking about a midstream product. So less and less quality spodumene that's being produced, mostly in Australia, is finding its way to China. It's dropping off. It's now being earmarked for internal vertical integration by the incumbents, or they're looking at Europe, possibly the US and elsewhere. So that also puts some control over it, because what you tend to find is big balance sheet companies like Albemarle and others can carry a bit of inventory. The Chinese non-integrated producers don't. They tend to take the material in, produce, and sell it. So that comes with its own issues. So what are the trends that support the structural thesis for continuing? Is, as I mentioned, an increasing amount of the new spodumene is being controlled by the producers. Albemarle and MinRes have agreed wodgina material is going to go in-house. They're not selling the spodumene to third parties. You're seeing more examples of that. The IRA heavily incentivizes conversion in the US. You've seen Tesla kick off now with Corpus Christi. I'm sure there are others. Piedmont has a planned plant in Tennessee. You know, whether we'll see mine and converter in the same place in the US, I don't know, but there's certainly a lot of brownfield sites and right-to-work states that are keen to take chemical converters on. The mining side, we'll see how that plays out. Conversion capacity outside of China is growing. You've seen Albemarle commit to additional trains at Kemerton. And they will need to look to source feedstock, all of these projects, again, competing. Permitting, construction, and ramp-up of battery-grade chemicals will take longer outside of China because there's less experience, there are more controls in place, so that will slow supply growth. China's access to quality feedstock is slowing. Processing, DSO and lepidolite, etc., has limitations given the high waste to ore ratio and waste on chemical production out of lepidolite. So there will be cost ESG limitations on that. The volatile equity markets, like we've seen recently, has meant we've seen a slowdown in equity raises from up-and-coming companies, which again, pushing those projects out, we're likely to see delays. And if we look from the clients that we have and across the supply chain that we speak to, incumbents are actively looking to secure tier one projects, and then they'll be able to control the available supply of both spodumene and chemicals. So we're definitely seeing a shift in the balance of power, and that is helpful to the structural deficit because, as I say again, Western companies with big balance sheets will moderate what they produce and sell given market pricing. So just a little reality check. I always see the numbers on how big resources in the world there are, and I've combined some, but there are a total of 14 JORC compliant resources in Oz. For all of the talk of the millions of tons, that's all that's out there. The ones on the left are in production, so they're not to be developed. You've got Mount Holland and Kathleen Valley, the SQM and Wesfarmers JV and Liontown under construction. And then you have 3 resources, JORC resources. Yes, people are drilling. Yes, there will be more, but they're still not at JORC level. You look at the Mana project and Global Lithium, the first one on the right-hand side, that already has MinRes and others on its register. You look at the far right, that is Essential Metals, MinRes bought in and blocked RGO and Tanshi's deal, and the middle one is Red Dirt, I think it's called Delta now. That also has the Hancock family and MinRes looking at it. So literally everything is almost in play. But that's all that's coming on is those 2 new ones and then the 3 little ones, and we've got to wait to see what we can drill. So that in conjunction with what you've seen in Canada, it's a phenomenal district. As Alex mentioned, we think there's a lot of potential. It's underexplored for lithium, but make no mistake, the timelines to permit, construct, and build you need to be realistic about those, and there's nothing in the near-term horizon other than a couple of plays. And then lastly, what's going on in Chile, you can decide for yourself. In my opinion, a heavy hand from state in anything at the ground level is never a good thing. We shall see how that plays out. It looks like Boric might be in trouble, so maybe those policies will go away, but are Albemarle and SQM and others going to heavily invest if they don't know they've got a 20-year deal in place? So that's the reality check from the supply side. I'm afraid this writing might be a little small, but it's some analysis I've done on the Chinese battery industry in Q1. If you have a look on the left-hand side down the bottom, how much has been produced in Q1 versus on the right-hand side, how much has been sold, and the year-on-year growth plus the exports, you're seeing sales and exports growing a lot higher than production, which is good news. We're seeing some inventory clear. In a survey done by ICC Sino, spoke to all the big producers, and they said they were going to up production in May by 20 to 30%, and some of the smaller ones by 50%. So we're starting to see some good signs in the Chinese battery industry, and the same for cathode. So that is an encouraging sign. But you can see if you look at 2022 and you look down at the final numbers, which came out after I produced, that was where we saw a massive amount of production and a drawdown and a cleaning out of building up an inventory of battery cells, which we're now starting to work our way through. Again, touching on what I spoke about earlier, this is Tesla, this is Lathrop, this is what they're ramping up. In 2022, for the entire year, they did 6.5 gigawatt hours of energy storage. Lathrop is a 40 gigawatt hour plant on its own. It is ramping to 10 gigawatt hours per quarter, and I think we'll see that before year end. And then they are going to construct another 40 gigawatt hour plant in Shanghai. So by the middle of next year, Tesla's BESS capacity will be 80 gigawatt hours versus 6.5 last year. So that just gives you a sense. My numbers are fairly bullish, but I see Esvolt came out on their announcements. They're making a bigger format prismatic cell for energy storage. They're projecting 384 gigawatt hours deployed in 2025 versus 1,200 for EVs. So take note of this. This sector is growing faster than the EV sector. It mostly uses LFP. You will hear talk about sodium ion. Yes, it may come in, but the latest cells that are being developed by the top-end Chinese producers are getting up to 12,000 cycles versus 6,000 for sodium ion. So there will be some competition and cost to life cycle trade-off. So this is something to definitely keep an eye on. It does explain away some of the battery cell production last year in China, because a lot of analysts are underestimating this. This year, again, as I say, watch our Row Motion interview. They keep a close eye on it. They're talking 140 to 150 gigawatt hours deployed, and that is meaningful and makes up quite a big gap. Globally, if you have a look, there's 300 gigawatt hours of operational and near-term planned capacity, and I think that's going to continue because you are having government policy in China where they are forced in certain areas to have battery backup with renewables, and the US market growing as well, and we're likely to see that given how much of new energy is renewables. Energy storage, definitely to watch. If you look at global battery electric vehicle sales on a total, including plug-in, BYD is the biggest, but if you look at it, EV sales are being dominated by BYD and Tesla. They're going to have almost a 40% share if you include plug-in hybrids this year. VW, BMW, and Ford are far behind. And there are questions about profitability. I don't know if you've seen the latest numbers. I think Lucid, they said it cost them $500,000 to make a $120,000 car. So how long does that last? Tesla is looking in terms of lowering its asking selling price, but they plan to make their money on full self-driving and other tech and add-ons to sustain profitability. As they bring in what's likely to be a Model 2 coming soon. So the question is, how will the other OEMs stay profitable as they scale out and they don't have things like FSD and they aren't making money now? So that's going to be tricky. We saw Ford's numbers. I'd go and have a look at those. There will be operational efficiencies, but it's going to be competitive. Again, that's my final point, is something to think about. It raises some concerns for me. Is the mass market is in the $10,000 to $40,000 price range, and who is going to make those profitably? You've already got BYD with the latest Seagull coming in at $11,000. It's a pretty impressive car. There are no offerings even close to that. So what is the way forward for the Western OEMs? That's still to be determined. Now I'll just have a quick look at the economics of lithium for those that think that the price is going to keep going down, although we're seeing even perennial bears come out and start to now upgrade. If you look at where spodumene concentrate prices are at $4,000 a ton, and you need on lower grade 7.5 tons of spodumene to make a ton of carbonate, and you've got transport, conversion costs, sustaining capex, etc. Your total cost ex VAT, if you use spodumene concentrate, is about $35,000 a ton. If you add VAT back on, which is how it sells in China, you're talking almost $40,000 a ton, 275,000 renminbi. So as demand for carbonate picks up, and the marginal producer has to use spodumene concentrate because there aren't other sources available, then prices are going to need to rise to around $40,000 or higher just to break even for the non-integrated converters. So we are seeing demand pick up. So my call is, we've seen the price already move. My call is possibly a little higher than 275. I think we're due to hit 300,000 renminbi in the next 3 months would be my view, up from a low, I think, of around 170, 180, but we're already at about 220, 225. So as I say, if demand picks up that spodumene is needed, the math doesn't work otherwise. So my conclusion, EV sales for 2023 are on track. BYD and Tesla are dominating, nearly 40% share. Energy storage, 100% long-term higher than EVs, something to focus on. The 2022 final supply shortfall was greater than my forecast. This higher price triggered, sodium ion, DSO, lepidolite, everything came out the woodwork. It was, $85,000 or whatever it was unsustainable. The buyer subsidy withdrawals, EV buyer subsidy in China has brought demand forward for some EVs into 22 in China, and caused the inventory build as we saw excess production. China is transitioning to the 6B emission standard from the middle of this year, and that's meant that all the cars that don't qualify under 6B, they've tried to sell now, which has meant that they've pushed a lot of ice into the market and discounting, which would have had some subdued effect on EVs, but we see it running. Carbonate, if a non-integrated producer needs spodumene, I've given you my view on the price. And then longer term, if you look at OEMs and you look at their financials and how they're doing when it comes to EVs, they need to lock in battery raw material supply and price. I think to ensure survival when we scale EV production and go into the mid-price market segment. I don't think they can risk it, so we'll see. We've seen some deals done. I think there's a lot more to go. And that's going to mean a lot more corporate activity in the sector. Thanks very much.